Did you know that Australia's construction industry is facing one of its worst crises in decades? In just the past year, over 2,000 building companies have collapsed, leaving thousands of homes unfinished and countless families stranded. Projects are being abandoned midway, builders are shutting their doors overnight, and experts are warning that this could be just the beginning of a much larger meltdown. What's causing this sudden chaos? It's not just one problem. It's a perfect storm. Skyrocketing material prices, severe labor shortages, rising interest rates, and broken supply chains are hammering the industry all at once. Even major, well-established companies are falling. Some say this is the biggest construction collapse Australia has ever seen. But is there a way out, or is the industry already too far gone? Stay with me because the reasons behind this collapse are not as simple as they seem. Some will genuinely surprise you, and the last one might just change the way you see the future of Australia's homes and cities. Number 1. Skyrocketing material costs. One of the biggest reasons Australia's construction industry is teetering on the edge is the explosive rise in material costs. It's not just a small increase. Prices for essential building materials like timber, steel, and concrete have shot up by more than 30% in some cases. What used to cost builders a manageable amount has now become almost unaffordable. And this isn't just a local issue. It's a ripple effect from global supply chain disruptions that started during the pandemic and have only gotten worse since. Imagine starting a house project with a locked-in budget, only to find halfway through that the cost of your materials has doubled. That's exactly what's happening to countless builders right now. They're stuck between honoring their contracts and absorbing huge financial losses, or walking away from projects entirely. It's a lose-lose situation, and it's forcing many companies into collapse. The biggest problem is that these price hikes are unpredictable. One week, timber costs might stabilize, but the next, steel prices could suddenly spike due to shipping delays or international conflicts. This level of uncertainty makes it almost impossible for builders to plan accurately or stay profitable. And it doesn't just impact big companies. Small builders are getting crushed the fastest because they don't have the financial cushion to survive these kinds of sudden increases. For everyday Australians, this means new homes, renovations, and even simple repair jobs are becoming more expensive, or simply getting abandoned. Stay tuned because this is just the first piece of a much bigger puzzle. Number 2. Severe labor shortages. While soaring material costs are squeezing budgets, another silent threat is crippling Australia's construction industry: a massive shortage of skilled workers. Across the country, builders are desperately searching for carpenters, electricians, plumbers, and bricklayers, but there simply aren't enough people to fill these critical roles. Some industry reports show that job vacancies in construction have reached record highs, and it's not improving fast enough. Why is this happening? Part of the problem is that Australia's aging workforce is retiring, and not enough young people are stepping in to replace them. On top of that, the pandemic severely limited the arrival of skilled migrants, who have historically filled many of these jobs. The result? Construction sites are slowing to a crawl, and project deadlines are being pushed out by months, even years. Think about this. When a builder finally gets the materials they need, they often have to wait weeks, sometimes months, for the right workers to become available. This leads to enormous delays, frustrated clients, and spiraling costs. And it's not just about availability. The cost of hiring skilled labor is soaring, too. With so few workers on the market, tradespeople can charge premium rates, putting even more pressure on already struggling companies. For many smaller construction businesses, this is the breaking point. They can't compete with larger firms for the limited labor pool, and they simply can't afford to pay the inflated wages. Projects get canceled, builders walk away, and the cycle of collapse continues. But labor shortages are just one piece of this devastating puzzle. Let's dive into what's happening with entire companies vanishing overnight. Number 3. Collapsing construction firms. Perhaps the most alarming sign that Australia's construction industry is in serious trouble is the rapid collapse of construction companies, both big and small. In just the past year, we've seen some of the country's largest and most trusted builders go bankrupt almost overnight. It's happening so frequently that industry experts are calling it a builder wipeout. But why are these companies falling apart so quickly? It's a deadly combination of skyrocketing material costs, severe labor shortages, and fixed-price contracts. When builders sign contracts to deliver projects at a set price, they are often locked in, even if their expenses double or triple. This means companies are forced to complete jobs at a loss, draining their cash reserves until they simply can't go on. What's even more heartbreaking is the ripple effect. When a building company collapses, it leaves behind a trail of damage. Unfinished homes, unpaid workers, and devastated families who are left with half-built houses and no clear path forward. Some homeowners lose their life savings in the process, stuck with mortgages on properties that might never be completed. This wave of bankruptcies is creating a dangerous domino effect. When one builder goes under, it impacts dozens of subcontractors, suppliers, and even other construction sites connected to that company. And unfortunately, government safety nets often aren't enough to protect everyone affected. The question is, how many more companies can fall before the entire industry starts to crumble? The collapse of construction firms isn't just a headline. It's a sign that the very foundation of Australia's building sector is starting to break. Next, let's explore how strict regulations are adding even more pressure to this collapsing system. Number 4. Regulatory pressures. As if skyrocketing costs and collapsing companies weren't enough, the construction industry is now facing another powerful obstacle: increasingly strict and complicated regulations. Across Australia, builders are dealing with mountains of paperwork, tighter safety laws, and tougher environmental standards that are slowing projects to a halt. It's not that regulations aren't important, they are essential for safety and quality control. But the problem is that the process has become so complex that it's nearly impossible for many builders to keep up. Getting a simple project approved can take months, sometimes even years, with layers of council approvals, environmental assessments, and ever-changing building codes creating a frustrating maze. For small and mid-sized builders, this is a huge disadvantage. They don't have large legal teams or compliance departments to navigate these regulatory hurdles. Every delay adds extra costs: workers waiting around, materials sitting idle, and loan repayments stacking up with no progress on site. It's like being stuck in quicksand. The harder they work to push forward, the more they sink. What's worse is that these regulations often change mid-project. A builder might start under one set of rules, only to find halfway through that new environmental guidelines or safety standards suddenly apply. This forces expensive redesigns and pushes deadlines even further out. Many in the industry are calling for smarter, faster, and more flexible systems that protect public safety without strangling builders with red tape. But until that happens, regulations remain one of the hidden forces pushing more companies toward the edge. Next, we'll look at how shrinking consumer confidence is drying up the demand that builders desperately need to survive. Number 5. Declining consumer confidence. Even if builders could somehow manage the soaring costs, labor shortages, and complex regulations, there's still one more problem that's cutting deep into the industry. People simply aren't building. Consumer confidence in the construction sector is falling fast, and many Australians are now too nervous to commit to building or renovating their homes. Why? Rising interest rates have made borrowing money far more expensive. Home loans that were once manageable now come with steep repayments, forcing families to rethink their building plans. Add to that the endless news of builders collapsing and projects being abandoned, and it's no surprise that people are starting to hold back. When consumers lose trust, demand dries up. And in an industry where cash flow is everything, this hesitation is devastating. Builders are scrambling for new contracts, but homeowners are too afraid to take the risk. They're worried about being left with a half-built house or suddenly facing a builder who goes bankrupt mid-project. This loss of confidence is creating a vicious cycle. Fewer projects mean less work, which forces more companies to downsize or close. That, in turn, creates more headlines about collapses, which further erodes public trust. It's a downward spiral that's incredibly hard to stop once it begins. Unless consumer confidence returns, even the strongest construction companies will struggle to stay afloat. And sadly, this fear isn't just a passing trend. It's becoming the new normal. We've put countless hours into creating this video to bring you stories that truly matter. If you found this eye-opening, drop us a comment, What surprised you the most? And don't forget, subscribing takes just one click, but it means the world to us. Number 6. Supply chain disruptions. Another crushing blow to Australia's construction industry is the severe disruption of global and local supply chains. The process of getting materials from factories to building sites has become painfully slow, unpredictable, and often extremely expensive. You might think supply chains would have recovered after the pandemic, but the reality is quite different. Ongoing shipping delays, port congestion, rising fuel costs, and international conflicts are still choking the flow of essential construction materials. Items that used to arrive within weeks are now taking months, or worse, they don't arrive at all. Imagine a builder waiting for roof trusses or kitchen fittings that have been stuck at sea or sitting in a warehouse overseas. Every day of delay costs money. Workers are left waiting, sites sit empty, and deadlines get pushed further and further out. Builders can't move forward without these key components, creating enormous bottlenecks that cripple entire projects. And it's not just imported goods. Even domestic supply chains are under strain. Truck driver shortages, factory backlogs, and regional transport issues mean materials within Australia aren't getting where they need to go quickly enough. For builders, this creates an endless waiting game, and time is money in this business. Many construction firms have tried to plan ahead, ordering materials early and stockpiling where they can. But with the rising costs and the unpredictability of deliveries, this strategy isn't sustainable for most. The longer these supply chain problems drag on, the more pressure they put on already struggling builders. And sadly, these disruptions are showing no signs of ending soon. Number 7. Interest rate hikes. One of the most crushing factors squeezing Australia's construction industry right now is the relentless rise in interest rates. Over the past year, the Reserve Bank of Australia has steadily increased rates to try to control inflation. But this has created a financial nightmare for both builders and homebuyers. When interest rates go up, the cost of borrowing money skyrockets. Home loans, construction loans, and business financing all become much more expensive almost overnight. For the average Australian family, this means higher mortgage repayments, tighter budgets, and a growing fear of overcommitting. Many would-be homebuilders are now walking away from their building dreams entirely. But it's not just homeowners feeling the squeeze. Builders also rely heavily on credit to finance their projects. Rising interest rates mean their loan repayments have jumped significantly, adding yet another cost to already razor-thin profit margins. For some smaller companies, these extra repayments are the final straw, pushing them to financial collapse. The impact of these rate hikes is rippling across the entire industry. Builders are starting fewer projects because clients are pulling out. Developers are delaying large builds because the financing just doesn't stack up anymore. Banks are becoming more cautious, and loan approvals are harder to secure. The result? An industry slowdown that's reaching dangerous levels. Even builders who survive the immediate cash flow problems are now facing long-term uncertainty, as fewer Australians can afford to build, buy, or invest in new properties. But this financial pressure isn't the only storm on the horizon. Next, we'll look at how the insurance crisis is making it almost impossible for builders to keep their doors open. Number 8. Insurance crisis. As if builders didn't already have enough to worry about, the insurance crisis is now hitting the Australian construction industry hard, and for many, it's becoming a breaking point. Construction companies can't legally operate without certain insurances, like home warranty cover and public liability insurance. But here's the problem. Insurance premiums have skyrocketed, and coverage is getting harder to secure. Over the past few years, insurers have become much more cautious about covering construction businesses. With so many builders collapsing and the financial risks stacking up, insurance companies are pulling out of the market or hiking up their prices to unsustainable levels. Some builders have seen their premiums double or even triple within a single year. And it's not just the cost, it's the availability. Some insurers are now refusing to provide cover to companies working on certain types of projects or in high-risk regions. Without insurance, builders can't legally sign contracts or start new jobs, effectively shutting them down before they even have a chance to begin. For small and mid-sized builders, this situation is almost impossible to manage. They're caught between rapidly rising insurance costs, shrinking profit margins, and an inability to pass those costs on to already hesitant customers. It's creating yet another bottleneck that's forcing more businesses out of the industry altogether. The insurance crisis is like a quiet storm. It doesn't always make headlines, but it's devastating the backbone of the building sector. And unfortunately, without urgent action, this issue could bring even more builders to their knees. Next, let's talk about how climate challenges are making it even harder for the industry to recover. Number 9. Climate challenges. Just when builders think they've faced every challenge possible, climate-related disasters are stepping in to make the situation even worse. In recent years, Australia has experienced a surge in extreme weather events, from devastating floods to record-breaking bushfires, and the construction industry is feeling the full impact. These unpredictable climate disasters are not just occasional setbacks. They're becoming more frequent and more severe. When heavy rains flood construction sites, work can come to a complete standstill for weeks. Materials get damaged, machinery can't operate safely, and timelines blow out beyond control. Bushfires, on the other hand, can make entire areas inaccessible and extremely dangerous, forcing immediate shutdowns. For builders, this doesn't just mean delays, it means major financial losses. They still need to pay workers, rent equipment, and cover overheads even when the site is sitting idle. Insurance might cover some of the damage, but as we've already seen, insurance premiums are rising, and payouts can take time, or worse, might not fully cover the costs. On top of that, building standards are rapidly changing in response to climate risks. New codes require more fire-resistant materials, better drainage, and stronger foundations to withstand floods and storms. While these upgrades are necessary for safety, they also drive up construction costs and extend approval times. The harsh reality is that the construction industry is now working in a much tougher climate, both literally and financially. And unless the industry can quickly adapt to these challenges, weather-related disruptions will continue to chip away at its survival. Up next, let's explore why the lack of meaningful government support might be the final blow. Number 10. Lack of government support. As the construction industry battles soaring costs, labor shortages, insurance crises, and climate disasters, you might expect that strong government support would be a lifeline. Unfortunately, many builders across Australia feel that this lifeline is either missing or simply not enough. The government has introduced some relief measures over the years, like stimulus packages and grants, but according to industry leaders, these efforts are falling well short of what's needed. The support is often slow to arrive, buried in complex application processes, or targeted at the wrong areas. Builders, especially small and family-run businesses, say they're drowning in red tape while waiting for help that may never come. Meanwhile, some of the most critical issues, like skyrocketing insurance costs, supply chain failures, and rapid regulatory changes, are barely being addressed at all. There's a growing call for more direct, urgent action. Things like emergency financial support for struggling builders, faster planning approvals, and national-level strategies to fix broken supply chains. Without this kind of intervention, many companies simply won't survive. Builders are being forced to choose between taking on risky projects just to stay afloat or shutting their doors permanently. The silence or slow response from government bodies is pushing more businesses to the brink. The industry isn't asking for handouts. It's asking for fair, practical solutions that can help stabilize the market. Without them, the collapse of Australia's construction industry could become unstoppable. So now we've reached the end of the puzzle. The warning signs are clear, the pressures are mounting, and the question remains: can this collapse be reversed before it's too late? Australia's construction industry isn't just facing one or two problems. It's caught in a perfect storm of challenges, from skyrocketing material costs, crippling labor shortages, collapsing companies, and suffocating regulations, to shrinking consumer confidence, supply chain failures, relentless interest rate hikes, soaring insurance premiums, devastating climate events, and a lack of meaningful government support. The pressure is coming from all directions. What makes this situation truly alarming is how deeply connected these issues are. When one part of the system fails, it quickly drags everything else down with it. Builders can't get the materials, they can't find workers, they can't get insurance, and they can't secure the financing they need. It's a vicious cycle that's accelerating, and the impacts are being felt by families, businesses, and communities all across Australia. The question now is whether this collapse can be stopped, or whether we're already too far down the path. Will the government step up? Will consumer confidence return? Or will we continue to watch one of the country's largest industries slowly unravel? We hope this video has opened your eyes to the full picture. Don't forget to like, subscribe, and share your thoughts in the comments. Your voice matters in this conversation.